Hello folks, I'm Melly Little and this is your daily TA wrap. Well, we take a look at these markets and we do it from a neoclassical perspective, looking at supply and demand to tell us which way the markets are probably going to go. I do this show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from the base of the Rocky Mountains. Folks, we had a pretty much just a push day, a very tight range. Remember, we had a big blowout move to the upside. S&P, actually, the S&P and the Russell both did the same sort of thing. That move to the upside encompassed a takeaway bar. You basically took away that Russian scare that took place on Monday, skyrocket back up, right, make a new high, do a little doji, and it actually goes over and back under. But I wouldn't call that a 2-bar reversal because we've had more or less a consolidation here and we're just starting to break out. So I don't think you can call that a 2-bar reversal. I believe you can say, yeah, it tested and failed. But, you know, I don't know that it means any more than it meant on the NDX last night when we were talking about it. Because here you had the same thing last night, right? You go over, back under, you had a little bit less volume, you know, but today it makes a new high. So, you know, I kind of feel like what you're seeing is just a tight consolidation after a big push in front of more economic news, of which some came out today, wasn't particularly good. Which has been the story, right? They blame it on the weather again. Russell doing the same sort of thing, tight range up there. That weather story is getting old, but you know, it has been bad weather, so it's not like it's out of the blue to blame it on the weather. It's just that, you know, you can only do it for so long, and at some point you can't. What point is that? Well, I think that's probably the April numbers. This is March, so we can probably get away with it most of this month. We got ECB in the morning, Bank of England in the morning, ECB being the more important one. Let's look at the currencies because this is where the impact is going to be felt. Boy, is that real or not? That looks like a bad tick. I haven't looked at this one in a while. If that is a real number, here, let's look at it on a different chart and see. Let's pop over here, FXE. Yeah, it looks real. So that big spike up, that was a spike failure on the highs. That is interesting because that, when you see that sort of thing, you get a big spike failure. That was the Russian. Oh, now that I'm looking back now, I'm starting to put it together. That was the Russian scare, right? So money flows in there, and then they sell it right back off. This is in a big consolidation. Now you finally got the test again. Actually, you already had a test once up here, but you test it again here, you test it again here, you fell every time, you're back down the other way. This kind of breaks down into two, well, actually about three. You can break it down into 2 large ranges, one there and one there. And they're about, you know, I like them to be about equidistant. That's about what these are. Looks to me like it's going to test this area. And when I look at that area, there's really no good support there at all, right? The good support is right in here. So, you know, ECB tomorrow going to announce whatever they're going to announce. Expectation is somehow they're going to try to ease in some form or fashion. That should be negative for that currency. I guess we'll see how that plays out in the morning. If in fact they do that, that should be supportive. I'm looking over at the dollar. Dollar's not doing anything, just hanging there. It should be supportive of the equity markets in Europe. And if we look at those guys, we can look at the CACs first, the French CACs. Coming back up, got no volume. This needs something to support it because it looks like it's trying to roll over to me. Let's see what the FTSE looks like. Same thing here. Remember, we talked about this last night. Volume characteristics here are not particularly encouraging. And let's look at the DAX. And on the DAX we got same thing. They're all rolling back over. So I don't see, you know, the way this thing looks doesn't look to me like it's going to actually help things more than probably hurt them. So I'm not sure if the ECB is going to do anything looking at these charts. So that's going to be a big, that's going to be the driver tomorrow. If we do get something out of the ECB and these things do go up and spike those highs, right, and push back up to the highs, you know, then you got a situation where we're going to probably come in here and see our market supported as a result. Otherwise, it's going to come down to what I was going to talk about next, which is unemployment number on Friday. That's going to be the next big number. ADP number came out this morning, weaker. So the expectation has to be that that number is going to be weak. So when you get those kind of expectations, yet this market is still, you know, basically hanging up here at the highs. Here's the SPY. You know, you got to think that the risk is to the upside as a result of that. So, you know, tomorrow, Friday, going to be big economic numbers, and those numbers look to me like the risk is to the upside, not the downside right now. Let me go over and look at the sectors. I don't have a lot to talk about tonight, so if you have some questions, tonight would be a good night to pop them in. I have plenty of time to take a look at things that you might want to look at in terms of stocks or questions. So let me go over and look at the sectors today. The one thing I noticed today, we had about $2 sell-off in oil today, and that hit the XLE. So the XLE pulls back about 1%. No volume on the pullback, so that's actually not a bad sign. Let's see what the OIH looked like, because this one has been one of the stronger ones, and this one's still hanging up there at the highs. Countering this was the XLF pushing up to the highs, and oh my, they got over it, didn't they? I didn't see that. So let's see here. 2216. It's a breakout. 2220s, 476 onto 616. So you got lighter volume, breakout, ABCD structures, and boy, this is a good thing. And I knew they were strong all day. I did not see them break out at the end of the day. That is a clean breakout. Now, given the fact that it's suspect, right? We may see, you know, a suspect has a tendency within 6 bars to retest. That retest region, of course, is the width of this high, and you know, you'll be testing against this volume since this was the higher volume. So we could get a test as early as tomorrow, or we could get it a little bit later. In other words, we could move up a little bit and then come back down and test. But that's a very positive sign, in my opinion, because this particular sector has been a laggard, and it's a big part of the S&P 500, about something like 16–17% of it. So between it and the XLE, you're looking at almost 1/3 of that market sector. So that's a good one. Let's pop through some of these others real quick and see what they look like. So XLB just keeps pushing. That's got a, you know, that's a break over all-time highs. IYT was strong again today. This also has been a laggard. That's up into that resistance zone we talked about. This is where it should try to fail. Let's look at the semis. They also were up again today. They gave it up at the end, but had more volume, so that's actually a positive. XLK also fails, just like the NDX did last night, like the SPX tonight. But again, I wouldn't call that a 2-bar failure, because, you know, XLK has been going sideways for 3 weeks. XLY had broken over and continues to lag higher. XLV also had broken over. Let's see what it did. And it failed, so that's kind of a little pullback thing. But that again, just like the others, it's you know, it's a little lower volume, but I can't call anything 2-bar failures here. They're just not extended on a short enough time frame, in my opinion. XLP, XLP broke out over a swing point yesterday. There's the breakout. These swing point highs. And looks like it's coming back in to do the retest regen right away. Yeah, so that's kind of safety money usually. XLU is the same. Safety money. And that one's up there just, you know, that one's actually holding well given the fact that usually when the market starts running, these lag because they're usually tail end of the economic cycle kind of thing, you know, right, where people trying to still have exposure but choose safety. Let me quickly look over at gold, silver. So gold couldn't get anything going. That tried to get back in a gap and failed to. That still looks like it wants to pull back. Silver is down here hugging those lows, wants to get back into the gap, so I don't think that one's going anywhere. I talked about oil falling pretty good, and yes, it did, and volume is decent on it, so it's coming back in to do its retest finally. So the retest regen on this, and you always want to watch these, right, to see how they attack them, and you know, do they regenerate or not. You know, this is more than 6 bars, right? So when you have more than 6 bars, you know, the probabilities are very high on the first trip back to get a bounce. And this one fits in that category. The only caveat here is it's coming back with some decent volume. So we'll see. I mean, if it, you know, usually that's just a close your eyes and buy it kind of thing, right? Because the percentages are like 82%. They're pretty high. So that's oil coming back. Let's look at the others. What are the others? Oh, I wanted to look at the bonds. The bonds tried to break down. Oh, they got back into that bar. 107.61. Yeah, they did by a penny. So the bond, and remember the bonds here, this is also going to be an interesting setup in front of the employment numbers. The bonds are coming back into the bottom of this big bar, right? They almost got to the top, didn't quite get there. So what we had seen for a long time now here with bonds are ABCD structures to the upside, right? One after another, they played out. That one goes to there, and you had a little nested one inside of it that went to there. Then you got another one, right? I mean, just one after another. They've played out over and over and over. Now you get your pullback, and it's abbreviated. It doesn't give you, right? It fails to get lower here. So now you're going the other way. So what do you got? You got another ABCD structure, right, that wants to try to go higher. So when I see this setup, and I see it hanging onto this bar, and we're going into the employment numbers, you say, oh wow, wait a minute, is this going to get back up here and finally test this high and try to break up here and, you know, do an ABCD up? And so, you know, that to me is kind of an interesting setup. So if bonds go up, that would say interest rates are going down. That would say that employment number is going to look kind of bad. That's kind of what that's the way that would read to me. I'd be curious to see if these move up right up into the top of that bar tomorrow, 108.35. If they do, they're setting up to jump that B point, get up into that high, which would suggest that employment number is not going to be as good, which is probably not going to be great for equities if true. And so that quote-unquote surprise to the upside may not happen. All right, let's see what we got here. Federico, JOSB. So this is a retailer, I believe. This is Just Bank Clothers. So you got nice big spikes here. You know, this is in the old days. I would look at these. You know, there's a thing in the old days. You call it you know, a breakaway gap. This is the measuring gap. Right, and then you get the final gap up there somewhere. I used to look at these quite a bit. So and they have validity. So you've done 2 of the 3 potentially here in terms of the gap up type stuff. Let's look at your weekly you're talking about. So on that time frame, yeah, it looks good. So yeah, I think if you get, you know, the way you have to trade something like this is you got a nice big support zone. Oops, got the wrong bars here. You got a nice big support zone right in this area, right? From here, from there to there, that green that you see. Anything that gets back in close to that is probably a buy with a stop underneath it, and you're expecting an extension with another gap up here probably somewhere. So yeah, that's a good looking stock. Real good looking stock. Let me see what the monthly looks like while I have time tonight. Yeah, it's breakout over all the highs and got volume. This is a good looking one. That's a good pick. What would you buy in the financials, XLF or something else? Well, personally, I think the safest of the financials is Wells Fargo. So if I'm looking at a financial, this one's already setting all-time highs, right? It's already at all-time highs. And as it claws up higher and higher, it's got a decent loan portfolio. You know, these guys are clicking on all cylinders. You got an ABCD structure up that's got a little bit farther to go. To me, this is just the safest one. When the market gave everything back, you know, this one also did too. But you can see, you know, it was already back up, breaking over the highs. And if you look at it, and I'm going to pull it back to the monthly again. If you look at it, you know, you've already broken over everything. And if you go way back to 2008, this is over those highs as well. I think that's true. Let me validate that over on something. I can pull it back farther. So let me go back to all. The only problem here is, you know, this one is adjusted, but yeah, it's way over it. So yeah, that's a correct statement. I mean, the high back here on Wells Fargo was 40. Of course, this is dividend adjusted. So it's, you know, it shows as a little bit higher than my charts would non-dividend, but still that's clearly over. So that, to me, that's the safest stock. What else is in there? I don't know. Let's pop in and look at some of these right quick. So let me go back to the TA Today charts, pull it in on not this one, but the other one, and I'll pull it in on the a 1 year weekly. And let's just look at some of the go-go guys like Goldman Sachs. Nothing special there. How about Morgan Stanley? Yeah, these all look about the same. So let's go to some of the others, like the large ones, like Citigroup. That looks terrible. How about Bank of America? Now that one looks good. So let's pull that one in and look at it. Yeah, see, this one can go in, and actually today would have been a good day to grab it because you just broke two swing point highs. This is going to test that high. I don't know if it's going to have the volume is the problem, but it's going to go test it. That's 1714, 1742. We're at 31, so 25. They only got 27 points left in it. You know, that's another 1.5%. But you know, if this thing fades a little bit, this would be one. What is Berkshire Hathaway? It's BRK-B, I believe. Yeah. Here's another one already at its highs. This one's already done its ABCD up though. Yeah. Let's see. Let me go over here and let's find some. Let's see what we got over here. So if we go to Tools, Sector Trends, and we'll just put in Wells Fargo so we can get down to the banks, and then let's go on the intermediate and find the bullish ones. So FB&K, I'm going to pull this out of the way so I can flip through these. So FB&K, and let me blow this up. There, so we can see it. Yeah, let's see what we got here. So, nah, that doesn't look so good. Let's go to the next one. This is actually an equal weight. FB&K I already did. RYF. This is an equal weight. Now that one's already broken out even cleaner, but there's no volume on it. Here's a suspect bullish one. KeyCorp. Let's see what KeyCorp looks like. Yeah, not as good. I'm just flipping through these to see what they look like. Like here's another one. This one's at highs. Not much volume though. So you can go in there and look at them. Here's another one that looks interesting. No volume. And again, I'm just trying to hit these real quick. This one's got a breakout. Yeah, these are all smaller ones. You'd have to get it down to the larger ones probably. You probably want to stay with the larger stuff. Here's Bankcorp. This one looks good. Some decent volume. I haven't looked at this one in a while. This is Home Bank. Now that one's getting ready to break out. Yeah, that one's not bad. Let me see what the weekly looks like on it. Yeah, I probably wouldn't go with that one. So anyway, I think that Bank of America looks good. You could go with the XLF. I mean, that's certainly a possibility. Here's another good one. This one's going to go back and hit the highs. This is PNC, a large one. A lot of volume. And that does look like it will go back to the highs. And that's what, 84 and a half at the highs. Yeah, it's not that much, another percent. So anyway, when I'm looking for them, that's basically what I do. I pop over there and I just go digging through them and see what they look like. Here's one breaking out as well, a little bit smaller. That's First Republic. Hamilton's very small. So yeah, it looks to me like probably the best bet is XLF or Bank of America. Or if you want to stay in something, Wells Fargo. Wells Fargo is one you can stay in. You don't have to come out of it. Let's see what this measurement is here. So 2050 to 2174. So it's a $1.20 on top of that. It's 250. So another 40 cents, another 2% on the XLF. Yeah, it's worth playing. So okay, I'm kind of getting towards the end here. You know, today was really a nothing day. It doesn't really tell you anything. The only thing it tells me is that price is extremely sticky here, right? And I want to go back real quick, and I'll just use the SPY for convenience. You know, we had weakness to start the year. We came off that weakness, right? And did the, you know, the famous V-shaped move, which has become infamous. It's what we do anymore. Then we basically consolidated here, right? We got a little bit of a breakout, immediately got hammered back down on the Russian scare, and then took it all away, and now we're back up above this. If you take just the range break, and just project it itself, right? That takes you up another % or so. And that's just the range break. But the bigger trade really is inside this thing, and that is that actually if you go up to here and then bring it back down, I did that wrong, let's do it again, is the ABCD structure that's inside here. So if I take, you know, from the bottom, in this case the SPY looks like this, right? That, you know, if you project it on up, you know, that's another 3%. You know, it's 2.5%, 3% at least. So that's the larger trade, right? I think we could hit this fairly soon, potentially even hit it on Friday's numbers if they surprise. And then this is probably going to consolidate for a while in here, which is what it needs to do. You don't want it to go straight up. If it were to go straight up and hit that, it's a sell for sure. Right? I mean, you got to take money off the table if it goes up there. But what you'd rather see it do is consolidate in this area, potentially test that top, allow you to take some money off and try to put some money back to work lower. I believe this year, unlike last year, you know, 2013 was a straight up year. You know, 14's different. You know, this guy is going to give us a bunch of ups and downs all year long, I suspect. And so you're going to have to trade it to make your money this year. And you're going to have to use these measurements, these extensions, and recognize where they can go. And the basic two that you can use, and that I use all the time, is range trades and ABCD structures. They give you pretty good estimates of where things want to go, and you use those guys. As a matter of fact, if you look at this closely here, if you stack these on top of each other, they're going to be almost equal, and if this does play out this way, that's definitely a sell up there when you get there. Alright, thanks for listening. Tell a friend, tell two. I'm L.A. Little. This is and was your daily TA wrap. Thanks for joining me. Have a great night. Take care of yourself. I'll see you back here again next time. Until then, take care. Good night, folks.